Hey ladies and gentlemen, welcome back to the channel. As always, it is Nick here, back with your daily crypto news and analysis. And today we're going to be talking about Ripple and XRP, so let's just dive in. And let's start off with this tab here. This is on Ripple's website, actually talking about XRP. Now, I'm sure that a lot of you have probably seen this page in the past. If you haven't, it's okay. But we do see XRP, utility for the new global economy. Fast and green, the digital asset XRP was built to be the most practical cryptocurrency for applications across the financial services space. And down here, we have XRP powers innovative technology transforming the global financial services space. Companies, institutions, developers, and individuals around the world use XRP in the blockchain on which it runs, the XRP ledger, because of its extraordinary utility. And here we have financial institutions, individuals, and developers, and the use cases tied to it. Financial institutions use XRP to bridge two currencies to facilitate faster, more affordable cross-border transactions around the world. Individuals use XRP as a more accessible alternative to traditional banking and to move different currencies around the world. And developers use the XRP ledger's strong open source foundation to build powerful applications without hurting the environment. And then down here, this open source, permissionless, and decentralized technology is carbon neutral and fast settling transactions in 3 to 5 seconds. And then we have down here XRP's unmatched benefits: fast, 3 to 5 seconds, low cost, fraction of a penny, scalable, 1,500 transactions per second, 24/7. By the way, this could actually scale even more, which we've learned about and talked about in the past. And then stable, there have been 70 million closed ledgers since 2012. There's actually been a lot more, but this statistic they're going off of, I forgot what the one developer said, but basically they were going off of just a typical statistic. But I think Matt Hamilton actually said that there's way more ledgers closed than 70 million. And then over here, sustainability, the XRP ledger is 61,000 times more energy efficient than proof of work blockchains, and also distributed. It's also run by a global network of 150 plus validators and is fully decentralized. Then here we have why Ripple uses XRP in the XRP ledger: instant cross-border payments or payment settlement. By utilizing XRP for cross-border payments, institutions can bridge currencies and ensure payments are sent and received in local currency on either side of a transaction in as little as 3 seconds. Now, you might be wondering, why am I even talking about this? Why am I discussing this? Well, we'll get to that here in a second, but here we have two interesting things. So, sustainable central bank digital currencies. Using a private version of the public open source XRP ledger, central banks can use a secure, controlled, and flexible solution for the issuance and management of digital currencies. The team at Ripple focused on building XRP ledger tools, services, and other resources. Team at Ripple X partnered with the global XRP ledger developer community to build the greenest infrastructure for blockchain applications and also innovations. And then down here, we have the facts about XRP as well, if you guys want to learn more about that. But today, I want to go over a few things. So as we look at XRP and the potential behind it and the power of it and all the cool stuff that everyone talks about, I want to discuss what's actually happening behind the scenes and why I believe that XRP will become a very large aspect of the transformative push towards a digital realm of society. And what do I mean by that is basically we are heading towards a world where the internet of value is going to be in full force. It is going to be the thing that blankets everything. And again, I do think that everything will be disrupted by this type of technology. Now let's go over here to Navin Gupta of Ripple. He's breaking down on-demand liquidity and the solution behind it. So no need for Nostro accounts. This is from ISO 20022. Let's do it over on Twitter. And listen closely to this video, and then I will discuss a little bit more after the fact.
Enjoy much cheaper, faster, and more efficient remittances.
So that's very.
And the biggest cost is liquidity cost. In the case of using ODL, on-demand liquidity, the solution that's started by Ripple, there is zero Nostro account balances that are required. So exactly what is going to happen is GBP in real time will get converted to XRP. XRP within 2 seconds will travel to Philippines, and in Philippines, it'll get converted to Philippines peso and the payout will happen. And this can happen throughout the day.
So there's no need to create
Nostro accounts. It happens 24/7, real time, with real time rates on both the sides. The execution is very fast. There is almost nil friction, and there is zero working capital that's required. That means all this cost, which was inherent in the parallel system, can now go back to the customers, and then we can all essentially enjoy much cheaper, faster, and more efficient.
So yes, everything that he is mentioning here is going to be, through on-demand liquidity. Now, currently, right now, a lot of people believe that XRP is powering on-demand liquidity in the full solution. No, this is not the case. Currently, right now, not utilizing XRP, yes, you could utilize on-demand liquidity. But when you combine on-demand liquidity with XRP, you are saving an additional 30% on your transactions. It's one of the things that I've always said. When you look at the efficiencies tied to on-demand liquidity, utilizing XRP is a no-brainer move. The problem is that currently around the regulatory environment, there's a lot of uncertainty. Meaning, guess what? They don't want to utilize XRP until they know that they can utilize it safely. So that is what we are waiting to see currently right now around XRP is one, regulatory clarity so that it unleashes XRP and its power. And when we do see that, well, watch out, because that's when financial institutions are going to start utilizing the power and the potential behind XRP. Now, also, like I said, yes, I believe that we are going into the digital realm of society. Over here from Eleanor Tereshi's saying, what I'm going to provide because regulators have failed is legislation out of the House that will provide a distinction between what is a commodity and a security in the digital realm. And we'll have a regulated stablecoin at the federal level. And this is from Patrick McHenry. He just recently spoke at the meeting with Gary Gensler as well as the stablecoin meeting. But we do see down here, Chairman Patrick McHenry slams SEC Chair Gary Gensler's regulation by enforcement approach to the digital asset ecosystem. Now, I don't want to talk more so about Gary Gensler, but I want you guys to listen closely to what is being discussed here.
You talked about crypto. You talked about worry or anxiety, I think, that you have that crypto and that industry is moving overseas. How concerned are you, though, about some of the things that are happening overseas, which is to say that one of the reasons I think that this industry has not been regulated in the U.S. is there's a lot of folks who still don't feel comfortable that the industry unto itself can be, quote unquote, controlled or regulated, and that's why it hasn't happened.
Well, it's still going to happen, just like the internet happens, just like free speech happens. People find a way globally to take their actions. What I'm going to provide, because the regulators have failed, is legislation out of the House, and that legislation will provide a distinction between what is a commodity and a security in the digital realm and digital asset ecosystem, and we'll have a regulated stablecoin at the federal level. What I'm trying to get here is participation by the regulators to actually come to the table and negotiate. And they've had a willful act, and especially Gary Gensler's had a willful act to just go out and send Wells notices rather than actually provide any clarity so we can have this innovation here in the United States and the economic growth that can come as a result of that innovation being here in the United States.
So what he basically said at the beginning, though, was we're essentially going to see crypto be regulated, but also it's going to be right on par with the internet. The interesting thing about that is how large the internet has become. Most people, when the internet first came out, they thought that it was a fad, that it was going nowhere, that it wasn't going to be anything big. Then all of a sudden, boom, it blew up. Crypto is basically at that infancy right now, except we already hit a $3 trillion market cap. So in the next couple years, I say, take a step back, look at what's happening around crypto. I strongly believe that crypto will become a $100 trillion plus asset class, but I also believe that's going to be much larger than what anyone can anticipate. Today, we've seen a few things around crypto being discussed, and here's one that's very interesting. Mr. Man XRP posted this over on Twitter. So we are moving to a cashless society. For the speculators in the room, here's your proof. Listen closely to this.
McHenry and when she was chairwoman, Maxine Waters, for paying attention to this space. The market really needs this legal clarity, and I think that's something that both of you have highlighted. But let me close with Mr. Chervinsky. If stablecoins are to eventually be used as an actual medium of exchange to move that store of value that is stable, do you believe it's necessary that they retain the attributes of cash, which is permissionless peer-to-peer transactions, versus an intermediary third party that facilitates the transactions?
Thank you for your question, Congressman. I think that's absolutely critical. I think that we are currently moving toward a cashless society, and we can go one of two directions. We can either follow China and have a currency that is totally controlled and surveilled by government and also by corporations to serve a business model of surveillance capitalism, or we can reproduce the benefits of cash. I think we all agree that cash is a very important tool for people to use, and we can do that in the digital space using stablecoins.
Yeah, I think for it to be trusted, it has to have those characteristics. My time's expired, and I yield.
So yeah, we are moving towards a cashless society. I strongly believe that this is going to become the reality that everyone is living in. It's only a matter of time. But the question is, how will this work? What is going to happen? How are things going to move? And are we going to be controlled by a CBDC that the government basically spies on? All of our transactions, everything is fully transparent. We have zero transparency, and they can control everything that we do and how we utilize our cash. Is that going to be the case? I beg the question, like, all right, well, if we get CBDCs, how bad is it going to be? But how can we also avoid them, right? That's the big thing, is how can we avoid them? Because a lot of people think that they are inevitable. But I do want to discuss a few things after the fact, but I just want to say that, yes, we are moving towards a cashless future. Here is a convert cash to card machine, and look at how crazy this is. So you put your cash in this machine, and you touch to start, and it's turning your cash into a prepaid card. Look at this. This is absolutely, like, this is crazy. And this could very well be on its way to everywhere. I mean, you might even be able to walk into your bank, buy the ATM machine, basically go in, put your card in, or your money, whatever, and boom, you're getting a prepaid card. It's very similar to like a debit card. I don't believe that cash is going to be around. I really do believe that we are pushing towards a cashless future. And I think that this is all by plan. Listen, they don't want to have cash. They don't, why do you think that they're pushing sustainability? Do you think that they are honestly going to care about sustainability? No, they absolutely don't. Look at corporations. Look at all these big companies. They don't care. It's all a gimmick for taxpayer money, and it's all a money thing. But they are going to utilize that narrative and say, hey, cash is this, cash is that. We need to get rid of cash, and let's push towards a cashless future, blah, blah, blah. And they are going to push this very hard. Now, how does this work? How do we get to this cashless society? Well, one, stablecoins. We do see over here, House Republicans are reigniting a debate over how to regulate crypto stablecoins as the US cracks down on crypto. Now, Danielle Dixon from Stellar actually posted this over here. We learned 3 things from today's financial CMTE hearing on stablecoins. 1, everyone wants clarity and agrees legislation is needed. Yay. 2, everyone also wants to protect the strength and use of the US dollar on the internet. It's important for the US-backed stablecoins to be regulated here. 3, consumer protection is a non-negotiable requirement, and that means clear definitions are necessary so that users don't go outside the US to find a US-backed stablecoin. And so, let me add a 4th takeaway. Now, let's get it done. Now, to me personally, I think that stablecoins will be the thing that disrupts banking the most. I don't think that, XRP, for an example, is going to replace banks. If anything, it's actually going to complement banks. But I do believe that stablecoins could ultimately disrupt the banking sector largely. Molly Elmore 22 over on Twitter posted this. She's actually quoting this down here, which is a bill. So we do see it seems really bad that the bill would make it illegal for American businesses or residents to receive unlicensed stablecoins. Imagine your buddy sends you €50 stablecoins for your trip to Paris. Oops, you're a criminal now. And yeah, basically, as we look at America right now around crypto and crypto regulations, it's absolutely like the Wild West. There's zero regulations, and we have an SEC running rampant saying that there is laws in place for these companies to follow, but they can't. There's no transparency. There's nothing happening. But we do see. It won't be a surprise if the big banks get the licenses to issue stablecoins and a retail CBDC gets squashed. Big victory that was always planned. And yeah, this would essentially be the narrative that they, push. I mean, think about it. Nobody's going to actually support a CBDC. Like retail, anybody supporting a retail CBDC is absolutely insane. Like, and it's simply because like we've done the research on CBDCs. We know what CBDCs look like, especially over in China. So as we do look at CBDCs, like I think that it would be in our best interest to fully avoid them. But I do think that we will see stablecoins most likely get regulated. We will see big banks being the ones that are behind them. But I question on if there's going to be any backing behind these stablecoins, because currently right now, when you look at USDC or even USDT, technically USDT, they say that they're backed by reserves. Now, I think Circle actually proved this. They got fully audited, but Tether didn't, which we all know the concerns about Tether. But this would be in our best interest to have stablecoins instead of CBDCs, especially for retail. But I do question on if the reserves will be there. I think that we need to 100% see them. What would be even better is if we had stablecoins pegged to gold, which would be incredible, because then those stablecoins will be backed by gold, and you could even have tokenization of gold where it becomes, fully like. I even said this before, actually. When you look at like the gold backed system, it failed because there wasn't enough gold. But when you tokenize it, you could have fractionalization of gold, which means, yes, we could have a gold backed system where it's fully digital, but backed by physical gold. That would be huge. That would be a major win for retail. But over here, we do see Brookings Institution conversation with Nellie Liang of the Treasury stablecoin regulations are among us. And it's about time they've put some guardrails in place. And listen closely to this.
It's hugely important because I think that it's funny, right? Because there's often this criticism of, oh, there's no regulation there. And then when different crypto companies attempt to become a bank or try to be regulated, then there's like, oh, well, we can't regulate you. And it's like sort of this like chicken and egg thing. But I think listen, I think Congress is really getting close to getting stablecoin bill done. I know that the House Financial Services Committee on both sides of the aisle have been looking at this very closely. And I think as the President's Working Group report found, like there's a gap here. This is something different that we need to make sure we have an appropriate framework for. And so, I think we would welcome appropriate regulation. We want to make sure that it's not something that is so burdensome that it applies solutions to risks that aren't there, given that this is a slightly different technology, right? I mean, we often hear sort of same service, same risk, same regulation. Well, it could be the same service, but it could be different risks because the blockchain is different, right? And so we want to make sure that if there's additional risks we see in digital assets that we don't see in the traditional world, that we have new regulation, but vice versa, if that risk is mitigated because there is a blockchain and there's transparency, then we don't need to have that same kind of regulation. But no, I'm very hopeful. I would love to see Congress get something done. I don't think it's out of the question that could even happen before the end of the year. I mean, I think there's a lot of momentum right now around getting a bill done. Some of them we've seen we have some issues with, and we're having good dialogue, with members of Congress to try to, provide some suggestions on how to fix that. But yeah, no, I think it would be an important step, and one that the industry has come around to, right? When I started this job 4 years ago, I don't think there was a whole lot of appetite for new regulation. And I think the industry has really evolved in their thinking, and that, the time has come that we need to put some guardrails in place.
Right.
So yeah, I strongly believe that we will be pushing towards regulations around stablecoins. And I think stablecoins, once they do get regulated, this will officially put in motion everything to be streamlined around a digital cashless society. Now, yes, a lot of people have said, this is going to be bad. It's going to be this. It's going to be that. I mean, listen, it's been a thing that we've been warning about for so long on this channel that, yes, we will get rid of cash. Cash is not going to be around forever. Fiat cash has failed. I think that has failed for so long, for major decades now already, which I've talked about even going back all the way to I think it was 1985, I believe. Ever since 1985 and even previously as well, the dollar has lost its purchasing power. And as you do look at it, we need something else. We need to have the full financial system restructured. We need, everything to be fully disrupted. And I do believe that digital assets will become the next evolution around this. And we do see over here as well, FedNow, no need for retail CBDCs. Again, as we do look at what's happening, do I think that FedNow is good? Absolutely not. But we do see down here that if the FedNow rules are tweaked down the line, it would be the role of commercial banks to trickle them down to customers. And we do see if financial institutions connect to the Federal Reserve via FedNow, all the lower tier economic participants also connect to it. For instance, a business would use FedNow automatically via its commercial bank / credit union. In turn, a customer interacting with the business would also use FedNow. This is made possible by ISO 20022, a new financial standard for relaying electronic data between financial institutions regardless of country and language. Given that the US dollar enjoys the status of global reserve currency, this also means that the FedNow is poised to become a new clearinghouse for most of the world's transactions. And I mean, again, as we look at ISO 20022, a lot of people have tried to, break it down and, say, hey, it pertains to XRP and XRP only, blah, 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 and this, that, whatever. No. As we look at ISO 20022, it does make the data richer. It makes things a lot more interoperable, which again creates an open system, which we need because there's a lot of fragmentation right now in our traditional system. Do I think that FedNow is going to be great? Do I think that's a good idea? Absolutely not. We don't have the infrastructure for FedNow. We don't have the infrastructure for a 24/7, 365 instant settlement payment mechanism. And I do think that FedNow could ultimately usher in a large amount of chaos around the banking sector. This could very well be by, plan, because what they want to do is collapse the financial system to usher in this new financial system, which would ultimately be the digital cashless society, which, hey, you could argue if we have stablecoins, yes, technically it's beneficial for us because, again, we retain our privacy and control. But if we have CBDCs, guess what? That's up in the air still. We don't know if we will. So there's a lot of things that we don't know right now currently, but you could see the things forming before our eyes. You could see the things happening. Most of the people are asleep at the wheel right now around the world, especially even in the US, but things are moving very quick. Over in England, actually, Matthew Liny posted Bank of England to provide guidance on tokenized bank deposits. The Bank of England is a Ripple customer. And here we have Bank of England to provide guidance on tokenized bank deposits. Over here, we do see a few things. So one, the new payments architecture. The Bank of England is well advanced in the build and implementation of a new central bank real-time payment system, RTGS, the central rail of the current UK payments infrastructure. This renewal program will increase resilience and access and offer wider interoperability, improved user functionality, and strengthen end-to-end risk management of the UK's high-value payment system. As announced this morning, the government and also regulators will expand the open banking framework through making improvements on API performance, improving the provision of information sharing to third-party providers, and working towards additional functionality such as a variable recurring payments. And also over here, we have the emergence in the world of crypto assets of so-called stablecoins is at the forefront of developments in the tokenization of money. So again, as we do look at stablecoins, it's becoming a focus here, especially even over in the UK. And we do see to maintain a stable value, a ledger system, usually a distributed ledger for recording and transferring ownership. These are supported by exchanges for trading the coins and custody arrangements for storing them. So what they want to do is they want to give a lot of the custody power to the banks. Obviously, this is going to be central banks winning at the end of the day, as they always do. So as we do look at what's happening right now around crypto, stablecoins, tokenization, things like that, it's becoming very evident that we are on the brink of a major transformation around finance, and it's going to be centered on the banks. I think that systemically we are seeing the push towards digital settlement, instant settlement, sourcing stable coins, digital assets, etc. And it's all for scalability. It's all for efficiencies. All of this, we've been discussing it for so long, and when we go back to XRP, I believe that XRP will play a vital role. I just don't see a world where XRP isn't playing a vital role, especially for not only the financial institutional space, but also individuals and developers, etc. The XRP ledger itself is tried, tested, and true for well over a decade. XRP as a currency has been, tried, tested as well. $755 million moved in less than 4 seconds for a penny. Where are you seeing that anywhere else? You're not. And I do think that financial institutions are definitely going to source the power of XRP, and it makes sense to. It makes sense to, especially as we are on the cusp of a major transformative push around finance and around the entire financial system. So with that being said, I hope that you guys enjoyed this video. If you guys definitely leave a like, subscribe, turn notifications on if you guys have more free content. You guys are more than welcome to follow me on Twitter and join the free Discord in the description below. As always, up to you all. Have a beautiful day or a beautiful night wherever you guys are on this. Before this, been Nick. Peace out, guys.